Everyone loves gold, but I found these three that hits harder, way smoother, and it won't fake you out like gold does. Now, if you don't know who I am, I go by Solo ETV, and on my YouTube channel, I take small accounts and grow them. We did a $4,000 account to $40,000, and I shared to you guys how I can consistently do that again by following this playbook right here that I will be giving you guys for free if you want to get that. Most importantly, the goal here is to learn these other assets that you guys are able to trade. If you are stuck on a gold rush, meaning like you can't make that much money, but you do make money, but at the end of the day, you're not profitable. So I'm gonna be sharing this video because I found within my 6 years of trading that these can do just as much damage as gold could do if you play it right. So some of the reasons why we're not going to be trading gold for those that do trade gold but can't be profitable. One, you guys already know the fake outs exist, and it's just the drawdown is almost larger than your actual account, and obviously you can't handle it, so you get a margin call. And then also you get inconsistency. So I'm sure a lot of you guys that traded and that's watching this video might be one of those traders where you might make 40K within your first few months, and then for whatever reason you're not profitable, or you got in really one good setup and then the next setup just almost took your account, or if anything actually blew your account. That's why this video is made for you. So let's go ahead and talk about my very first one, which is going to be oil. So you guys know already how I feel with oil, and if you don't know, you will know. Oil is the steady paycheck, and I'm going to show you how precise oil can be. So as you guys see, look at this. With oil, you can catch a lot of pips, and this is what I mean by a steady paycheck. If you work a job and you know what a steady paycheck looks like, then you should know what I'm talking about. If you look close attention, this is about 2,000 pips it did in one session. Now let's look at another session. In the range, we still did over 1,000 points. Even during London, we still catch a lot. As you see here, we caught a lot. As you see here, we pretty much had this whole play right here. So easily you can catch the same amount that you can catch with gold, but in a steady growth. And this is why I preach about oil all the time. So let me show you how to really trade oil properly. Think of psychology as your gold mine when you're getting into oil. Oil moves like a heavy weighter, slower than gold, but with precise, predictable power. It rewards patience and timing, and that is what we want. We want to be able to get rewarded accordingly and not rewarded because we are super fucking impatient and we want to make money now. That's what we're not going to do. So how do we trade oil? So the time frame we're going to be looking at is New York opening during 8 a.m. to 11 a.m. Eastern time after overnight consolidation. So the nice thing about oil is during London, you typically get mad consolidation, but it's not as consolidated as like Tokyo or anything like that. But if you look here, we have London session, we had a bit of consolidation. We had London session, we had a bit of consolidation. This is what I mean by the consolidation. And I'm gonna show you how you can catch this the right way if caught on time. Now, after the consolidation, the trigger marks previous days highs and previous days lows. Watch for New York open trap of liquidity sweeps, and that's basically what I was just showing you guys earlier. And then the confirmation is enter on a 44% to a 618 fib pullback with an engulfing candle in the sweeps direction. And I'm gonna show you why this is so vital. Using the Fibonacci isn't just a regular Fibonacci tool. You're not just drawing it from one range to another range that had already happened. We're using it to find valid areas of where market could pull into that fair value gap, or into that imbalance, or into that OB, or even into that supply and demand zone. And this is why order blocks is so vital and so important if you use it right. So if we go into our fib retracement and then we were to look at that range like I mentioned earlier, you see right here we had the swing and then the swing. So now I am just waiting to see which direction it wants to grab liquidity. So seeing that we swept that liquidity here instantly during New York opening, and then it went the other direction, and then immediately it went right back that direction. So typically what happens is if you get an equal high as well as an equal low, which is that swing high and swing low in the range, which is known as consolidation, you can really expect the market to play both directions. Let's say you get something different where you're seeing something along the lines like this play right here, where you're not essentially getting equal highs or equal lows, but you're either getting just equal lows and then you might get a high. The nice thing about this setup is, like I mentioned earlier, let it sweep that liquidity, but it's still going to go that direction essentially, instead of it taking the up and the down. Reason being is because you want something where you see equal highs and equal lows, essentially like this and essentially like this. But here we only got that major wick because it already swept liquidity. So there is no reason for market to even come back to that area sometimes, because one wick is just major sweep of liquidity from previous structure, and we don't need that. So if you look here, we see we got that, and then the moment we did get that, we now jump on a 5-minute scale, and off the 5-minute scale you can immediately see that we swept it, and then we draw our fibs from the swing high to swing low, and then we just waiting on market to break above the imbalance area of the 44%. And this is where you guys can catch your fair value gaps, your supply demand, and then you see right here we got that fair value gap. The market instantly dropped. Now if you guys want to get more in depth and actually trade this with a broker that has low spreads and fast execution, go with GatesFX. This is a perfect opportunity for you guys to get in at this moment, because if you really want to scale an account, because that's all we do on our channel is grow and grow and grow. So when you deposit $1,000, you get additional $1,000. This is a profit magnet for you to scale your account way faster. Go check out the description. You can get in with GatesFX, and then from there, like I said, deposit your funds. Make sure you go for the 100% Tradelocker sign-on bonus. At this time it's available, but it will not be available later down the road. So it's important to get in now and start trading with us, and even start learning from my videos so you can start making profits. Other than that, let's go ahead and get right back to the video. Confluences: use volume spikes and liquidity zones to align with entries. That is literally what I just showed you guys there, of how you can look for perfect setups. High probability setups is always mandatory. So the more confluences, the better the setup. And then your exit model is very simple. You're just going to wait for TP at 0.27 for basically a 1 to 2. And then if you want to run it a little bit more, you can have it go all the way to the 0.618 to extend it to a 1 to 3, which is what I go for when I'm trading oil. Now this is the play for oil, but let's say you don't want to trade oil. I even have something better for you that can make you a lot more money if played right. Let's talk about it. You might know this one. This is NASDAQ, the wild card. But here's how you really catch this the right way. All right, so the psychology that I want you to have when getting into this with this trade setup, think of it as high volatility. As you already probably know, big rewards for traders who can handle speed and avoid over leveraging. This right here is the key part to this whole pair or this whole asset. How you should trade it is during New York opening, which is 9:30 to 11:30 a.m. Eastern time. That's when the US stocks market opens. The trigger is identify the pre-market high and pre-market low, and watch for liquidity grabs in the first 15 minutes. I say this all the time. This is part of my 3-man standing strategy that I break down every single time and make so much money off, because this is one of my 3 confirmation entry models that I have, and I have 5 setups inside of that. All I just need is 3 to align, and then I'm in a trade. So then after that, the confirmation is retest off the sweep zone with a strong reversal candle. And then the confluence that you want to use is use intraday liquidity pools. And the reason why I want you guys to focus on intraday liquidity pools is because NASDAQ is a lot more volatile, and when it comes to trading NASDAQ, you have to be a little bit more on the safe side when it comes to a lot of these zones. But you have to know what zone is accurate, because one thing about NASDAQ is that market will come up and then come down and then go all the way up, and then you're like, this right here is my supply demand zone, but then sometimes you're waiting on it to come and it never does. But then there might be a fair value gap here, or essentially there might be an OB here or supply demand here without you even realizing that it's valid. If you use the fibs confluence for your targets, if you use the fibs and you draw out the most recent range from this swing to this swing, you're not drawing it from this swing to this swing, because this is what's accurate right now from here to here. So you want to always look at the most recent lower lows, lower highs, and higher lows, and then wherever you see that 44% mark is at, that's the level you want to pay close attention to, and then that's the level you're going to be looking for your targets to enter in the market. And that right there is how you catch mad pips when it comes to trading NASDAQ. This is just for NASDAQ traders, but I got one more for all of my other traders. If you really want to get down and dirty on something crazy, this is going to be one for you. Let's talk about it. And it is GBP yen, the yen rock. This is how you really master this one in the psychology side. So yen is the intraday sprinter. It thrives during high volatility overlaps, rewarding traders who can spot liquidity grabs and ride. So if you are a trader that loves structure and you love liquidity sweeps, liquidity grabs, in all zones when it comes to POIs extreme. This is going to be your breadwinner right here. And the beauty about this is you can actually trade this any session. So if you work a 9-to-5 job and you can't trade New York session, this is going to be your friend, best friend. How you trade this is session timing, London session turns into New York Open, especially 9 a.m. to 10 a.m. Eastern time during overlapping. Your trigger is watch for liquidity sweeps on London highs and lows right before New York Open. Yen often traps early London traders before reversing. And just to show you what I mean, if you look here, we have pretty much this is our liquidity. Remember, you look for equal highs mainly when it comes to liquidity. If you just get one spike like this, don't necessarily say that that's what I'm too worried about. You want to look for equal highs with a lot of wicks. And we got that play right here. So in my mind, I'm looking at it as like, all right, we have that here. We also have it here. Now my mindset is stuck on, all right, taking out these highs. Let's go ahead and take out these highs and just go from there. Now, another really good play, if catching this right, is you will have to hit on like a smaller time frame as far as a 2-minute or even a 5-minute, but 5-minute prefer. When you're seeing these setups, let me zoom in a 5-minute. When you're seeing these setups, these pullbacks, this pullback right here is all you need. And if you look at it correctly, you have a swing low and a swing high. We literally hit this 44, and then if we would zoom in, you see that we have all resting supply here, and then market immediately went up. And then now I'm looking on it to come to this area simply because I know there's a lot of liquidity there. That is how you play it right when you're trading GJ. Now, as far as the exit model, it's going to be the exact same thing. You can aim for the 0.27 fib extension, but always try to go for 1 to 2. So even I showed you that trade, and if you were to look for just the fib and it wasn't a 1 to 2, then that's not a trade for you to take. You need to have some rules when you're trading, because you just can't be fucking trading just to trade. Otherwise, you're just going to be in a fucking rabbit hole and confused about your whole setup and your whole fucking career of trading. So the idea is lock in with the rules, lock in with these videos, lock in with what I'm saying, and you can really capitalize off of these different assets. So that being said, I hope you like this video. Make sure you comment, like, and subscribe if you want to see more. And if you want to get more in our community, check out tradewithsolo.com. We have 2 options. You can either join with option A by signing up with our broker. Make sure you deposit at least $250 and start trading, and you're in our community for good. Second option is you can just go with the subscription model, 7-day free trial, and you're also good as well. So other than that, I appreciate you, your boy Solo. I'm out. Peace.